effectively created one app for various bank accounts and wallets to plug in and route payment transactions centrally through. With these two innovations happening simultaneously, the growth in digital payments just catapulted. I just shared in 2015, we were at 2.5 billion transactions. In 28, with China being at 7.5 billion, in 2018, India actually crossed China for the first time. In 2018, India and China were both processing 12 billion transactions. And now in 2021, as we stand end of August data, India has already processed 25 billion transactions as digital payments, with 3.5 billion digital payment transactions being done in the month of August alone. Again, for perspective, China has done about 15 billion transactions digitally on digital payments this year, 2021. US has just crossed 1 billion digital payment transactions this year. So that, in a nutshell, I guess, encapsulates the story of how payments has evolved in the last over the last decade, and particularly the last 5 years in Asia and very much in India, on the back of enabling regulations, enabling technology, and enabling connectivity, and lastly, and enabling consumer orientation to adopt all these new technologies. That's how I see it.
I guess it's a good contrast to look at, right? The way the growth has happened in China, followed by how India's UPI has transformed it. While in a developed economy like the United States, you're not seeing a similar scale, despite this, the economy being 5 times India's and almost 2 times China's. Zennon, your views on what have been the catalyst for the evolution of payments in the last few years? You're on mute, Zennon.
Sorry, somehow I got muted on my speaker as well as the app. I think my co-panelists laid out a lot of the key trends that we've seen. I mean, clearly, COVID has accelerated what was already a push towards digitization, enabled by things like UPI. I think one thing that really stands out in our mind is the race to zero in payments. When you look at card payments, cross-border payments, domestic payments, the story is no longer about the fees. It's more about what you can do once you have people using the payments. And it's really taking a page out of the Alipay and WeChat Pay playbook. Is, payments are kind of the baseline for these organizations to get embedded with individuals. And then it's what you can do on top of that. Layering other financial services like wealth management, lending, credit scoring on top of that is very important. And so I think that's really the transition that we'll see. I mean, we see when we look at various different geographies around Southeast Asia and Asia as a whole, you have the regulatory initiatives like the Pay Nows and the UPIs coming in that are creating this baseline of kind of domestic payments. And then on top of that, you have the regulators that are pushing, like in Malaysia, to get down to 50 basis points in terms of the MDRs for merchant transactions. Companies within the payment space need to think about what the next step is. And often that is the additional products and services that you can layer on top of that. I think the other interesting thing would be as some of the tech platforms get more involved. I mean, we've seen numerous false starts from players like Facebook, but when you look at it, the stickiest super app that we have globally is WeChat. And, Musheer, I know with your background in China, I'm sure that's one of the apps that you open up every day. And I was there for 14 years. So, even still when I'm in Singapore, I'm opening up that app on a regular basis. And that's probably the most stickiest app that I have in my phone besides WhatsApp. And so what Facebook is able to do with WhatsApp, I think will be really interesting as well. And I think that evolution is, the real winners are the consumers or the customers, whether that be businesses or individuals. The amount that we pay on a regular basis for cross-border transactions as an SME is dropping regularly because of services like Wise that come in with incredibly competitive offerings. And then we have the digital banks that are going to be launching here in Singapore and have already launched there in Hong Kong that are further driving competition. So I think, that race to zero in fees and the increased competition is really changing the nature of things. The one additional comment I would make, and part of your question, Musheer, was around the technologies that enable this. I think it's very telling that none of us really focused on the technologies because it really truly is about the business case. And I think too often in the financial industry, we get distracted by shiny objects, blockchain, AI, when really fundamentally what we need to solve is the customer pain points. And I think, when we look at the players like the Wises, like the Alipays and the WeChat Pays, there's no sexy technology on the back of that. It's just, it's a mobile app with data in the background and fundamental basics of financial technology, right? It's not relying on blockchain or cryptocurrencies or anything else. And I think that's very often we lose sight of that in the market. And so I think that the fact that we haven't really focused on that for the answers to this question is kind of telling of the role that technology plays. It's there, but it's not the primary concern.
Yeah, I guess if you take the original use case of fintech and payments, you can go back to M-Pesa in Kenya, and that's where the kind of the fintech revolution in the last 2 decades has been driven by, right? Where it was about the use case rather than the mobile technology, and it was an innovation that Vodafone could implement. I want to come now to talking about cross-border payments. We've discussed about the growth that's happened, but we often face 3 main challenges in cross-border payments, right? One, over time, it's expensive for both individuals and businesses for cross-border payments through the traditional systems for a variety of reasons, both in terms of fees as well as the spread that we see. Secondly is we've had instances where it can be quite slow. Few transactions can take a few days. I've had instances where a business payment from mine took 3 weeks to get through. And I'm talking about the last quarter, right? And then thirdly is ensuring that there is adequate AML and CFT oversight, right? So that you can track all of these from a regulatory and tax management perspective. So how do you see fintechs coming in and catering to these key challenges, right? Maybe we'll start with Paroma as a fintech. How's Revolut looking at this now that you are, across 2 major regions in terms of Europe and Asia? How are you looking at this, given some of the markets are very dependent on remittance as well, in particular in India?
Sure, thanks, Musheer. As I notice, Afaq from our audience has also commented saying cross-border payments is still a huge problem and a better solution is required with less fees. Couldn't be more in agreement with you, Afaq. And I think, Musheer, you've articulated it brilliantly when you said that the 3 major problems are around cost, speed, and AML, if you think about it. Even in India, our deputy governor spoke about how important it is to democratize cross-border remittances, and that there is a need to focus on clarity around exchange rates, time zone differences, regulatory differences, across the board, and price discovery being a concern. Now, if I were to break it down to how we look at it, okay, if we pick up cost first, what are the drivers of this cost? If you look at it, the cost can go all the way up to 20% of the transaction amount when you're actually doing a cross-border remittance, right? One is to do with the sheer complexity and management of settlement in multiple currencies through the chain. That is one of the biggest contributors to the cost. The second is the processes still tend to be physical, and the cost of that physical store and manpower to collect the documents, do the due diligence, etc., that adds a second leg to the cost, and that adds most to the timeline of processing the transaction as well. The third key element is the difference between conversion rates of interbank currencies and the rate cited by the banks on both sides. So in order to enable this today, the way it stands is multiple intermediaries are involved in the process, right? So those are the key drivers of this entire complexity that is associated with doing cross-border remittances. And that also affects AML, is because there are multiple intermediaries involved. There are delays in relaying of remitter information and recipient information and doing the AML and fraud checks across the entire layer through which the money is moving. Now, when you look at fintechs like us, our orientation to this, one is because it is completely digital, right? There is no physical document to be submitted or physically verified. You can actually submit the documents through the app, pull it from central repositories, and you can auto-validate those documents. It makes that entire process faster than banks. As an example, we can do it in 24 hours or less, this entire document checking leg. That's one. And that does away with the cost of having a physical infrastructure, the cost behind manpower to do all of these checks, which reduces a large chunk of the cost. The second thing that an operator like us who has presence across 32 countries already is that we need not take a transfer fee from the residents for most of these countries we're present in. Since we're present on both legs, we can pass on that benefit of a transfer fee to customers and reduce the cost significantly. So that's the second leg which a fintech like us can actually solve for, to make it a reality, which we are within geographies, to actually do cross-border remittances at literally intra-bank rates. The third aspect is on an app like a Revolut, you can actually hold multi-currency accounts, which means you can hold accounts in multiple currencies, within which you can actually transfer whatever amount you want to keep within those different currency wallets. So then you again don't have to worry about exchange rates as you're making payments from accounts or wallets which you hold in that currency itself, where you need to regularly make a payment. That really contributes to making the process easy and consumer friendly for an individual. And an allied benefit of that is enhanced transparency. When you actually create those multiple accounts with multiple rates which are absolutely visible, and all you charge is intrabank rates, it's absolutely transparent about how the process is moving, where your money is coming from, where it is going, how it is getting converted, what rates are being applied. So these would, to me, be the key ways in which a fintech like us can disrupt this entire cross-border remittance to genuinely make it user-friendly. And the last, from a regulator's lens as well, because we're present on both sides, we're doing automated checks on documents, and we're pretty much eliminating intermediaries in the process. We can have much more robust AML and fraud checks as well, because there is one single entity who's doing the checks at both ends of the spectrum about who is the remitter and the remittee, who's remitting and who's getting the money. So it enhances significantly regulatory concerns around cross-border remittances. It reduces costs significantly for the users. And again, I see Afaq commenting, yes, exchange rates with banks is an issue. Definitely, it can solve for that and bring down costs for the consumers, and it can streamline the entire process. So we were talking about this a little while ago, like Kaustab, I think originally hails from India, now is with MAS in Singapore. If he wants to send money back to his parents who are still in India, for example, you can actually completely streamline that process, make it transparent and easy and instantaneous. Likewise for me, I have a nephew studying in NUS in Singapore. Right? Today, if I have to just send him some birthday cash, I would think twice, because it has to be like really big for me to go to a bank, take on the entire headache, take on the entire cost to do a transfer. I'd probably do it when my son goes for admission and pay the fees, is when I would take up that kind of a challenge. But a regular thing like sending my nephew a birthday present of some cash, I wouldn't think about doing today. But when a fintech comes in and solves all this, I have a sitting wallet with Singapore dollars, I can just send him something to celebrate his birthday. That's the kind of revolution that fintechs can bring into the cross-border payment space, and we are genuinely looking to bring in that revolution as well.
So I want to bring in Kaustab here because just talk about processing, right? Yeah. So go on, Kaustab.
I just wanted to add on to what Paroma was saying, and then Paroma, you're bang on, and I just wanted to give the similar kind of experience I had in 2018 when I moved back to Singapore. I had to send $200 to a friend in Philippines, and I paid $40 as a transaction charge, and it took 5 days and multiple phone calls, and then still we had no idea where that money went, and ultimately it got credited. So I think you're bang on in saying that the biggest issue from a consumer point of view is, one is cost. The first thing I would look at how much I paid for that, doing that transaction. And second is the efficiency of doing this. Whether I have to go to the branch to go get a transaction done, fill up multiple forms to do this. And if you have to flip this back to a FI or a bank or a digital bank, they also has to go through exactly what you said, that it's a multiple hops. My $200 were Sing dollars were converted into US dollars, then it was converted back into a Philippine peso, and that's where the rate which I got when I did that transaction. So these are the issues which I think fintech has done very well in the last few years. And the only thing which I felt, Paroma, like we need to have, if I have to send that money, I still need to have a wallet in Singapore, I need to have a wallet in India. But if I don't have to, my mom has a State Bank of India account in Asansol, right? And she need to get that cash. How do I do that? And that's where I think, and sorry, Syed, we are front running this conversation, that's why I think you need to have those domestic rails get connected. And players like Paroma can work on those. And I'm quite sure still, if I don't know what is the transaction charge you're charging for this kind of transaction, but it can lower down because some of these checks, the AML checks, which we've been talking about, the sanction checks, and it doesn't go away whether you do a cross-border or you do a domestic transaction. If that can be done and automated at a rail level, at a retail payment rail level, then the work for fintechs like Paroma or Wise or any other banks makes it even more easier, and that benefit gets passed on to the consumer, so they get the best of rates while when we do something like this. So I think that was the genesis when we actually looked at doing the Thailand connectivity, and now we are moving into the India connectivity as well. So I can't hear you, Syed.
Musheer, you're on mute.
Sorry, I think my audio got a little bit of an issue.
Yeah, now it's okay.
Yeah, sorry. You make a good point, and I'm going to actually help you build on top of it, and I'll come back to Zennon on the next question there. But we are seeing the boom. MAS is at the heart of this connectivity for national payment rails. You started with India, now you're talking with Thailand and a few other Southeast Asian countries, and we hope this can be something that goes, in multiple jurisdictions. Kaustab, would you want to talk a little bit more about the vision behind why MAS has been doing this, and what are the complexities involved? Because many people don't understand that complexity, especially when it comes to the conversion or between the two currencies. If one is not free floating like India's isn't, then it becomes even more complex. So we'd love to hear more from you on that.
Sure. I think the vision for MS it's quite simple. Obviously, it has to be a consumer-centric vision where we wanted to kind of, if you kind of step back, 2016 when we went into this evolution of this the domestic payment retail payment network, which is the FAST, and followed by a Pay Now, which is the proxy-based system to transfer retail money within the country. It's something similar to what UPI has done as well. The convenience which was brought in, like in 3 clicks, I can transfer money to my colleagues or anyone within Singapore, and it is fast. It's instant actually. It's secure. It is cheap. There is no transaction fees being paid. So what more a consumer would want to do a transaction, something like this, and it's so efficient. It's so simple and intuitive. Now, eventually, I think the pain and what we talked about for a cross-border transaction is that how slow it is, how costly it is, how complicated it is. The thought process was, why don't we connect something like, say, PromptPay was offering something similar in their domestic market as well. So the thought process was, why don't we connect both the system and give a same kind of experience to each other's domestic user when they transfer money overseas. It was a very high-level thought. When we started peeling the onion, we understood that it's much more complicated than what it sounds. The first thing was that there was a lot of technology-related issues which we need to, because though every country has their own set of retail payments network, but everyone has their own specifications. So one was that Thailand was on a 20 seconds turnaround, Singapore was on a 15 seconds turnaround. The VPA, which is a virtual address which you need to kind of look up for a mobile number, that was centrally stored in Singapore, and whereas it is decentralized in. So those are the challenges. Also the message formats. I mean, somewhere in ISO 20 or 22, others are not on ISO 20 or 22. So there is a lot of asynchronization which is there when we start getting into more details of each of these countries' connectivity. We were able to solve most of it, And I think most importantly, what we were able to solve was also the fact that there was the legal and the governance framework around the dispute handling framework. I think those are very important and can be carried over irrespective of whichever market which you go to. Then when we decided to kind of move on to India, I think one of the things which before we move to India, I want to share with you, Musheer, and rest of the viewers here, is that we went with, we kept our transaction limit of $1,000 per transaction. And surprisingly, we found that when we went live in April, the indicators were like the numbers were moving very, very fast. It was what we expected. It was at least 20 to 30% growth month on month we were seeing on these numbers. But what we saw was that transaction value was kind of going down from, it started with $500 and now it is around $250, which actually shows it's a behavior shift which has happened. And these are all migrant people who have moved from Thailand to Singapore. So they started trusting on this system. They don't have to worry about paying that extra cost. So what earlier they used to do is to accumulate that money and try to transfer once in a month, right? And here it is like what Paroma said, that I need to send something to my dad tomorrow because it's his birthday. I just need to send that amount immediately with a very less amount, and it goes instantly. So these are some of the big plus which we are seeing. Plus, also what is there is that the money is moving from the alternate channels, right? There are a lot of alternate channels of money movement which still exist in today across borders. So once this is becoming easy to use and it's so cheap to use, those flows are now moving into the banking flows as well, which is better for an AML terrorism financing point of view. It's much better to control those and seeing those flow coming through a legitimate source. So these are some of the learnings which I felt was I wanted to share with all of you.
This is very, very insightful, and I think this is the message that a lot of people don't get. When you're looking at your phone, it's like, why isn't it happening right now? Because in majority of the countries, the national payment systems are there, right, or jurisdictions, and real-time payments is now a reality for domestic payments. So cross-border is no longer only technology; it's just a matter of time, I would imagine, right? And Zennon, I'm going to bring you in here. You have a deep expertise and understanding of how these super apps work, right? And we spoke about without naming WeChat, we spoke about WeChat. I like to call WeChat Hotel WeChat. You can check in, but you can never check out, right? Especially in mainland China, in terms of how embedded they are. We've now seen that model being replicated by not only Grab and Gojek, but also the likes of Paytm and others are looking at moving towards it. And on the other side, technology players from Reliance Jio, Facebook, Amazon maybe are all moving towards that model. I wanted to get your sense in terms of how do you feel, the banking as a service, payment as a service concepts that are coming through. How can big tech firms leverage off that for cross-border payments? Google has been trying to do something like that, and I also get Paroma's view on Revolut post this, but we'd love to get your sense from a regional perspective. How do you see these big techs leveraging of technology provide cross-border payments?
Yeah, it's a really good point, and I think one of the biggest challenges for these companies is where this sits on their strategic roadmap. For a large tech firm, and we've seen this with some of the players that are moving into the space now. I mean, if payments isn't part of their DNA and part of their strategy from the very beginning, moving into that space is challenging. It's difficult to get the bandwidth at an organizational level to really focus on it and do the steps that are needed. I mean, we've seen a lot of false starts. We've seen companies kind of neglect to look at the local context they're moving into, neglect to think about the AML concerns and the KYC concerns from a lot of these firms. And so I think, the successful ones are the ones that see it as a strategic imperative that's embedded throughout the organization. Now, that being said, when Alibaba launched Alipay way back in 2004, it was designed to solve the very small pain point of trust in e-commerce. I say small, I mean, it's 1.3 billion people, but at the time it was only 1.2. That trust in e-commerce was really the initial pain point that Alipay was seeking to address. And I think at the time, Alibaba had no idea that they were going to create, as smart as Jack Ma was in creating this, had no idea where Ant Group was going to go in the future, nor did he probably know about the IPO being canceled, et cetera. But at the beginning, at least, they didn't have a view of where that was going. And then very quickly, they kind of built the strategy around that, with payments being in the baseline. So I think, beyond having a sticky platform, really having that be part of the long-term strategy and where that's going is very important. I mean, just enabling payments on a platform is fairly trivial now, even if it's not enabled. I mean, you have the example in India there with using links within WhatsApp. A lot of the e-commerce and social commerce there happens through chat as opposed to through a dedicated e-commerce website. And so there's been a lot of businesses that have done really well on the payment linking within the apps to be able to click through to a payment. Which is, in places like India and Indonesia, that's very important. So it can be part of the offering to enable other products and services, but I think really the successful companies are the ones that have figured out where that fits into their strategic roadmap, because, everybody wants to be a fintech, but not everybody's going to be a fintech, at least a successful one.
I'm a bit of butterfingers with my laptop today. Paroma, how are you seeing Revolut now leveraging off it right now? You're looking after the Revolut India operations, but you do have the operations in Singapore as well, and of course the home country in terms of UK, where there's a significant amount of remittance that comes inward into India from there. How would you look at that space? Is it something that you're exploring actively?
So, Musheer, since you started and Zennon, you were talking about it from a banking as a service or payments as a service lens. We at Revolut actually look at it a little differently. I think large tech companies, like you shared the names of Google, etc., might look at it as a service because that's not a core product offering of theirs. And that is a double-edged sword, as Zennon also pointed out, about one, obviously the ability to access their already built customer base from some other business model. But the other thing about focus on this kind of a business to really make it work. And I will pick off on the latter to go and say that we're actually not looking at it as a service. We're looking at it as a product that we ourselves get licenses for and bring it to customers in a focused and dedicated manner. And I'll tell you why, because the stuff that we spoke about earlier, right? Whether, let's say the cost leverage, right? When can you pass on the entire cost benefit to the customer? When it's your own product. When you have manufactured the product, you are actually conducting the rails of doing the transaction on both ends, is when you can genuinely pass on that benefit to the customer and not have your business model break. The other way, if you want to pass on a benefit to the customer, is to take out money from deep pockets and give it. But in that case, as we all know, the business model itself breaks and you bleed on the unit economics if you intend to pass on the benefit to the customer when you yourself are not a manufacturer of the product and you're sourcing it, let's say, from a bank or payments company, etc., and layering it with your digital access. So that's kind of the way we look at it. And that is the essential difference between the way Revolut operates in multiple countries and we intend to operate as well, to actually build the solution, get the licenses, and give the benefit to the customers ourselves. The second bit that comes on it is an area around customer ownership, and the customer ownership has two legs. In a banking as a service kind of a model, at the end of the day, who owns the customer? Is it the tech giant who has acquired the customer, or is it the bank or payments company who's offered the product to the customer? There are breakages that happen there. Because who communicates with the customer? Who solves a problem if a customer problem happens in that case? Who takes on the onus of ensuring that the right checks and verifications are done on the customer to take any liability of choosing, let's say, of an AML risk transaction? All right. When you are doing it yourself, even that gets consolidated. The customer is clear on who's giving them the product, who can solve any problems that are happening with the product. And also from a regulator's lens, the buck stops there. About that entity also doing the checks and knowing who the customer is that they're enabling the transaction for. So I think these are twofold benefits. One, customer facing in order to offer the real benefit to the customer by manufacturing your own product. And the second, from a regulatory and a banking lens as well, to be clearly accountable to ensure that the right experience is given to the customer and the right controls are put in place. That's how we look at it, Musheer.
Thank you. I'm quite conscious of time. I want to see if we have any questions that we have. Chance to explain. I think we've done okay. I wanted to come to one very interesting and very important element of what we are seeing in terms of central bank digital currencies. Right now, just this week, we had Bank of International Settlements release their report on multiple CBDCs, featuring more so Thailand, Hong Kong, UAE, and made in China. But we also know with MAS, Project Dunbar is in the works. So I wanted to get a sense of your views on the CBDC world. I'll start with Zennon to give us a little overview of what he sees as how CBDCs could factor in for for cross-border payments, and then we'll come to Kaustab in terms of giving an MAS view before we close.
Yeah, thanks, Musheer. I think obviously the Chinese e-CNY experiment is one of the most advanced globally in terms of central bank digital currencies. And despite the reports that the PBOC has put out both in English and Chinese, one thing that remains very unclear is how the e-CNY would be treated cross-border. That is a big question mark, not only for the general public, but I think for the PBOC as well, the People's Bank of China, the central bank, the sponsor of the Cbdc project. And I think that's where the complications, especially for countries like India or China, where it's capital controlled. When I first got to China in 2004, there was a cafe I used to go to, and there would be a guy that would come in with two of these large envelopes, purses of money. And one was Hong Kong dollars and one was renminbi. And for the whole day, he would just move back and forth between the two currencies, charging a little bit of interest. And that was his way of avoiding the capital controls that individuals face. And so, conceivably, I could be here in Singapore, I could have a digital currency wallet, a friend could have a digital currency wallet, we could exchange and we'd be evading capital controls. So it's very sensitive in terms of how this is going to be handled. And I think, we spoke to the BIS in the past couple of days after the release of the report. It'd be really interesting to see how this mBridge infrastructure really starts to facilitate those cross-border transactions, because I think there's still a lot to be decided around that. I think what is really interesting, knowing that we're running close on time, is the stable coins. I mean, the ability, and we've used that for some of our corporate and personal payments, using a USDC to move money around the world. It's very cheap, it's very fast, it's very traceable and transparent. And I think, for cross-border payments, at least initially, that stablecoin initiative is really the thing that we find very interesting.
Kaustab, your views?
Sorry, I'm having difficulties to remove the unmute button. So I know Gautam is there, and then we need to wrap up quickly. So I won't take much time. Let me talk about, there are four basic problems we are trying to solve on DLT technologies and CBDC when it comes to cross-border payments. And some are in a different state of evolution. Some of them are ready and can be actually used in the Malaysia connectivity or the India connectivity as well. So the first one is the cost of operations, which we are working, which is the project Woodbin, which is basically, it's a kind of a reducing the number of intermediaries and kind of taking out the operating hour limitation. That's for cost of operation. The cost of compliance is where we are looking at Pateor, and this is already in a production state. We are leveraging DLT technology for enhancing safety and the risk. Cost of integration, which is where you touched upon, Musheer, was that Project Dunbar. We are looking at how we can have multilateral settlements. And this is where I think is most important when it comes to cross-border, because today what we are doing is a bilateral rail. Once we look at a multilateral rail, this will become a very important initiative, and we hope to solve this through kind of a CBDC solution. And lastly, the cost of FX, which is more efficient, having a more efficient liquidity management. We are working with Banque de France and making sure that this liquidity pools and automated market markings are kind of there. So this is how we are looking at on a comprehensive way tackling the CBDC and the DLT and leveraging them in the cross-border space.
I know we are on standby, but I want to end very quickly with each of you just giving me one sentence in terms, or two sentences if you want to take, but very quickly in terms of what would be your most the thing that you're looking forward to most for cross-border payments in 2025. Paroma?
Okay, you want me to start? I think we're at close of time. So very shortly, I think since we were on the topic of Cbdc, and I noted a lot of questions from people here also saying, what if there is a global unified currency? What happens to cross-border payments then? I think even from India, including the RBI and the Deputy Governor, has been a part of saying that sustained efforts are underway even here to evaluate the application and viability of Cbdc, and Zennon and Kaustab have also articulated the challenges and even from a viability lens, the cost lens of doing a Cbdc. From my lens, there are basically three things that I would wish for. Yes, a cross-border digital currency, which is multilateral rather than bilateral. But the values that I will stress on is safety, to ensure that we create the rails which ensure that any such transaction is safe. Second, the efficiency, to ensure real-time or near real-time movement on those rails through the currency. And the third, and to me, quite honestly, probably the most important value, is that it holds constant value. Because unlike today, where there are private cryptocurrencies in various markets, the value keeps fluctuating. And therefore, it is very difficult to offer transparency in a cross-border payment scenario. So to be able to create a digital currency that holds constant value is something that I would put a lot of stress on. So if we can create, we are doing what we can from our end to create a cost-effective and efficient means of cross-border payments. If we can layer that on with a multilateral unified digital currency that also holds constant value, is I think where the next level of disruption in cross-border payments will happen, is my last 2 cents on this one.
I know we are really short of time, but Paroma, whatever you just said, same for my side, but except only one thing which I would want to add here is interoperability. I think an interoperable system, it's something like what we use today for a phone call, right? So we really don't need to worry about who is there and which network or which service providers. And despite that, we are able to make a telephone call across the globe. So that's the similar kind of interoperable system across the globe to transfer money, plus whatever you just said, Paroma, all those things of safety, cost, and instantaneous process.
Zennon, last word to you before we hand over back to the organizers.
Yeah, and I sound like I might work for Paroma's employer, Revolut, but I was speaking to one of their team a couple of days ago, and it resonated with me as everybody having a financial account. I think that's, beyond our viewpoint, but bringing people into the financial system, leveraging some of these technologies to make sure that everybody is included and economically empowered is where I hope we are 3 or 4 years from now.
Perfect. Once again, I want to thank three of you for very deep and wonderful insights. We could have gone on for a couple of hours more on this conversation, but we have limited time. I want to again thank the organizers of GFF for having us here today, and I'll give back to our host to take us forward from here onwards. Or have you lost our host?
Yes.
Garima, over to you.
Thank you so much, Mr. Syed, and thank you to all the panelists. As you mentioned, we could go on and on about this topic, and it was going on wonderfully, but we had a hard stop, unfortunately. And thank you again to the panelists. Thank you again to the delegates for being a part of this session. For everyone, here's your chance to become a proud owner of the RuPay on the go. Basically, if you visit our NPCI booth, which is on the platform, and apply for the complimentary RuPay on the go device, you will win some exciting prizes. So please do go and visit, and we will be back with yet another exciting session shortly. Thank you very much.
Thank you.
Thank you.
Thank you.